the gold silver ratio is around 84, maybe a little higher, which is really historically very high. I mean, silver has been able to stay above 30, which is a start, but I still think it's a little bit frustrating right now that it's still at 32 while gold is at 2,700. And it wasn't just in 2011 that we went to 50. It was in 1980 we almost hit 50. The way I see silver, and there's a lot of physical demand for silver for industrial use, countries like China and India, and I think that's going to continue. I think what will happen to the silver price, but problem is I don't know when, we could be close, is that once it breaks key levels on the upside, and I'm talking about here 30, 33 maybe.
The gold to silver ratio is historically high, around 84. Silver has stayed above $30, but it's still frustrating to see it at $32, while gold is at $2,700. In both 2011 and 1980, silver nearly reached $50. There's a solid physical demand for silver, especially for industrial use in countries like China and India, which will likely continue. Once silver breaks key resistance levels, around $30 to $33, it could see a rapid price increase. However, the timing of this breakout remains uncertain. The speaker, MarioInnecco, a financial commentator known for his insights on global markets and precious metals, exposes that the US dollar will remain in use. Still, reliance on it as a reserve currency, particularly through treasuries, will likely decrease. China and the BRICS countries have already conducted only 30% of their trade in dollars and euros. Countries with strong economies will see their currencies gain reserve status, with gold likely playing a larger role. The US dollar's dominance will lessen, impacting US power, as it can no longer print and borrow freely. However, the dollar will still be needed. Similar to how the British pound remains a top reserve currency, despite losing its dominance in 1954. The BRICS aims to create a single currency and a trade mechanism where member countries use their fiat currencies, but hold around 40% of their foreign exchange reserves in gold. Mario points out that this isn't fully a gold-backed system, but gold will play a key role. Countries would use gold coins in an ideal sound money system, but the BRICS plan focuses more on reducing reliance on the US dollar. This will keep the demand for gold strong, especially since many countries like Russia, which holds about 31%, don't yet have 40% in gold reserves. If you enjoyed the video, give it a thumbs up and subscribe for updates. With only 20% of viewers subscribed, help us reach our goal of 1,000 subscribers. Your support makes a difference. Your subscription is a reward for our efforts.
I think the US dollar, yes, will still be around, of course, because countries will want to deal with the US dollar. I think the most important thing is like using treasuries or treasury bills as reserves. I think that's going to decrease. And if I'm not mistaken, I think China, or it could be the BRICS, or I think it's China, they're using, only like 30% of their trade is going through the dollar and the euro now. I think it's one of the reasons why the Fed has been reluctant to cut rates as aggressively as the market had forecast, like at the end of 2022. Yes, they cut recently, but if you remember well, in 2022, they're forecasting cuts already in the beginning of this year, end of 2023, excuse me. So, I think the countries whose economies do the best and produce the most and sell the most, their currencies will, of course, do well and be used as reserves on that 60% of the BRICS mechanism. Of course, gold will be part of it. And who knows, maybe the United States and the UK and other Western countries, the EU countries, Eurozone, they'll have to start focusing on gold and raising their reserves of gold. And so I think that's where it's going to come from. The challenge, it's going to be what do you hold as reserves? And the most reliable asset, in my opinion, that's apolitical, holds its value, and is really stable and has been stable for thousands of years, is gold. So who knows? We might even have some countries holding more than 40% in gold reserves. But the dollar, it's not going to go away. It's just its importance is going to be less. And the U.S., will have, that will be a big dent on U.S. power, because up until recently, they could just print and borrow and buy anything from anywhere. They didn't have to earn, let's say, Brazilian reais, or they didn't have to earn South African rand or any other currency. When they're looking to buy things abroad, they can just do it with their own currency, and I think that's what's going to change. But some people will also want to buy things from the U.S., so they'll have to have dollars as well. So it's just like the pound sterling in the UK. It's still one of the top five, I think, reserve currencies, and it lost, of course, the major reserve currency status. Actually, it was 1954. Some people think it was after World War One, but the dollar only surpassed the pound in 1954 as the major reserve currency. BRICS are going for a single currency. What they want to do is set up some kind of monetary and trade mechanism where countries trade with each other in their own fiat currencies, but at the same time have gold reserves of around 40% of their foreign exchange reserves. So it's not really a gold-backed system. It's kind of gold-backed, but I would say in an ideal world of sound money, and unfortunately I don't expect the BRICS to go that way, you would have just gold. You'd have a gold coin from China of certain denomination. That would be, let's say, 1,000 yuan, and then a gold coin from Russia, and that would be it. But this is different. This is just trying to circumvent the fiat dollar. So I think it's going to be like just an alternative to the dollar. But be as it may, they're going to demand the demand for gold is going to stay very strong, because I think a lot of these countries don't have 40%. I think Russia's up to like 31%.
Mario tells us we're still in the early stages of a precious metals bull market, confirmed by gold breaking above $2,100 earlier this year, marking the next leg up. Gold had struggled to surpass $2,000, but now we're in a multi-year boom driven by inflation, central banks likely cutting rates and resuming QE, and the limited supply of gold. Investors may shift to precious metals as other sectors, like the Nasdaq and S&P, underperform. Wealthy family offices with minimal gold exposure could also increase allocations, driving demand. Additionally, mining companies are seeing strong profits due to high gold prices, which could attract more investors. There's a solid physical demand for silver, especially for industrial use in countries like China and India, and that's expected to continue. Mario highlights once silver breaks key levels, around $30 to $33, it could surge quickly, potentially testing $50 faster than many expect. While silver has risen slowly in recent years, its breakout could be sharp. Historically, silver often outperforms gold in precious metals bull markets, and it may follow a similar pattern to the early 2000s. 2025 could be a big year for silver, or possibly even late 2024. Now, let's divert our attention to the interview.
The break of 2100 earlier this year, that confirmed the next leg up, because up until last year and beginning of this year, we couldn't get back above 2000. I think in February we still tested below 2000, and that was very near the top from 2011 at 1920. So we had to really make a new clear high to confirm the next leg ups. And that's why I think we're still in the early days. We still got a few years left. I'm not sure if it's 3, 4, 5, or 6 in the gold bull market. And the main driver, of course, is inflation. And by inflation, I don't mean the CPI, but I mean the fact that central banks are going to have to cut again and probably do QE again. And it means the simple law of supply and demand. Gold is very hard to get out of the ground. Yes, all the gold that's been mined still above ground, but people are not going to part with their gold when they see what's going on. The other driver, I would say, that is probably going to help the gold bull market is the fact that we could see people from other sectors, people who don't watch gold, look at it and say, wow, gold's doing really well. And the NASDAQ, S&P, and Dow, they've done so well. Let's take some profit here and shift our capital towards the precious metals and commodities. So I think that could be a driver. And I think family offices, which are companies that manage money for very wealthy families, they still have a very low kind of percentage holding for gold, silver, or precious metals. That's like 1 or 2% of their assets. So could you imagine people finally realize, wow, gold is doing really well. We need to put a little bit of money into that. And people are going to realize that the mining companies in the last 3 or 4 months, they've done really well because the price of gold has stayed so high. So their profit margins have gone up a lot. And yes, we've got some results coming up, I think on the 23rd, which is when this video is going to be published from Newmont, and then in November from Barrick. And that could drive a lot more investors into the mining sector as well in gold and silver. Countries like China and India, and I think that's going to continue. I think what will happen to the silver price, but problem is I don't know when, we could be close, is that once it breaks key levels on the upside, and I'm talking about here 33, maybe, we could see silver move up really quickly. It's not like it's going to keep going up slowly like it has in the last few years, because maybe people are going to say, oh, we'll get to 40 by the end of 2025. No, I think once silver breaks out, it's going to go up really quickly. I don't know where it's going to go, probably test the 50 level, and it could be faster than most people expect. And I'm patient with silver, and I have real silver, but I also have some of the silver miners. And silver is like some people call it gold on steroids. And usually in the precious metals bull market, silver usually leads the way. So I think it's only a matter of time till it catches up. And I think it did the same thing back in the early 2000s. Gold started to go up quite nicely. Like in 2004, it broke above 400, which was a key level. And silver only really started moving higher in 05, maybe 06. So I think 2025 could be a good year for silver, if not even the rest of 2024.
In conclusion, gold and silver are poised for strong performance in the coming years, with silver likely to break quickly once crucial resistance levels are surpassed. The ongoing shift away from the US dollar, particularly among BRICS nations, and the potential for increased gold reserves globally will continue to support demand for precious metals. As central banks face inflationary pressures and market dynamics shift, the precious metals bull market is likely to gain further momentum. How do you think the change from the US dollar will impact global trade in the next decade? What factors do you believe will most influence the timing of silver's breakout to $50? I'd love to hear your thoughts. Share your comments below. Remember to support the channel by liking this video, subscribing, and turning on notifications for more great content. Stay tuned for the next video.